I would like to take this opportunity to thank my colleagues who worked hard to schedule the event so that it matches the expectations of our respected guests and highly accredited scholars attending the conference.
Hello everyone, good evening. My name is Rolla Abu Jafari. I am a board member of Farabourse company. Welcome to Islamic Finance and Applying FinTech panel. In this panel, we will be discussing topics on the Islamic finance and using financial technology. As you know, Islamic finance is growing rapidly, and in this growth, the combination between financial technology and Islamic finance based on Sharia principle will help each other to make a better service and improvement of the Islamic financial service. As you know, FinTech has a far-reaching implication for Islamic finance, for banking, investment, insurance like takaful, wealth management, and other services that Islamic finance industry will provide for the consumer. We hope that this discussion will be informative and interesting for you. We have a distinguished panelist, Dr. Ibrahim Nejad. He's an assistant professor at Sharif University. Dr. Youssef Dinj is a faculty member in Istanbul, Zaim University, and we will have Dr. Nisar. He's a member of the Rezivi Institute of Management Study. At first, I present a brief introduction of the knowledge-based ecosystem in Iran, and then we have an article of this panel, and then the panelists will comment on the article and present their presentation. Please show the slide. Hello, Dr. Nisar. Okay. I think that it is interesting for the, special for the foreign guest, that we have a knowledge-based ecosystem in Iran, which have three waves of the STI policy. At the first wave, from 19 to 20, we developed a higher education and scientific publication in Iran, and this is the infrastructure of all knowledge-based ecosystem. Then the wave two, we have promoting the research in the university after the development of the higher education in Iran in some international index. For example, the number of the engineer in Iran, the rank of the Iran is 4. The second wave, the research in the university will promote, and the publication of the scientific paper increased. And the third wave, we use this infrastructure and this amount, this critical amount of the student, professors, and some knowledge-based company to promote the knowledge-based product. These are three waves that in Iran, the policy of the science, technology, and innovation promote. Next slide, please. The conclusion of this policy are more than, nowadays, more than 9,000 knowledge-based companies in Iran. By the law, the knowledge-based company divided into two types. One of them is the manufacturing, and second one is the startup. 5,226 of these companies are manufacturing companies, and the second one, a startup company, more than 2,794. These companies are categorized by into technology categorization. For example, nanotechnology, biotechnology, agricultural, advanced material, and IT. Information technology is the base of the fintech industry. Next slide, please. Because of these policies and infrastructure, from 2011 to 2022, Iran jumped 42 places in the Global Innovation Index compared to 2011. Next slide, please. In the startup ecosystem in Iran, the majority of the startups are in the e-commerce marketplace. Near to 20% of the startup company in Iran are active in the e-commerce marketplace. And on the subject of this panel, the fintech is 5% of the startup in Iran based on the Ecomotive statistics. Next slide. By this research, if we categorize fintech ecosystem into financing, pay tech, bank tech and wealth tech, capital market, insurtech, digital asset management, reg tech, we have a national innovation system function like entrepreneurial activities, knowledge development, knowledge dissemination, guide of the research, market formation. These are the function of the national innovation system which apply to the fintech ecosystem in Iran. Human resource mobilization, financial resource mobilization, creation of legitimacy. Based on this research, financial resource mobilization for the fintech ecosystem is the best one, and the least one is the entrepreneurial activities, and knowledge dissemination and guidance of the research are the weakness of the ecosystem of Iran. Next slide, please. Please, next one. The future studies in financial technology in Iran based on the two basic scenarios, if we have an integration of the rule and standard for the development of the financial technology activity, especially for the regulation body like central bank and SEO, and one of the major trends that affect the mega trend in Iran is the opening international and transaction exchange. These are the some four ideal type scenario to the future of the fintech industry in Iran. If we have an integration of the rule and standard, an active rule of the regulation bodies, and after the sanction and opening of the international, there is a good opportunity for the financial technology in Iran, and we have a paradise of the technology. And the word of the prosecution, if the second scenario will happen, an abandoned island, the third scenario, and hell of the financial technology is the fourth one. Next slide, please. The next one. As a conclusion, I want to emphasize that the fintech industry in Iran has a great potential and a strong infrastructure as a knowledge-based ecosystem in Iran, and especially for compared to our region. But the major hub in the region, such as Abu Dhabi and Dubai, the Iranian fintech industry require more immersion. And the rise of the, but because the Islamic principle, Islamic finance principle, the rise of the fintech has create new possibility and difficulty for the Islamic financing industry. And these are providing creative solution to the old financial issue and the new regulatory and ethical concern for the fintech that arise from the applying fintech for the Islamic finance. We should consider these possibilities and difficulties. And these are the base of subject of the panel that we want to discuss about it. At first, we have an article, and please, the author of the article, I don't know the name, Dr. Morsali. The title is Challenge of Utilizing Cryptocurrencies in Capital Market and Islamic Jurisprudence Approach.
Thank you very much for inviting me to the stage. In the name of God, my name is Farad Morsali. I'm a full-time faculty member of Imam Sadiq University, and I have been working in the Iranian financial market for over 15 years. And it's my great pleasure to be here to presenting, something which is about fintech. Before everything, I would like to thank the organizer of the event, Securities and Exchange Organization of Iran, and also I would like to say hello to my friend from Turkey, Professor Dinç, and also other colleagues from other countries. the presenters before me and also the esteemed moderator talked about the basic elements of, fintech and cryptocurrencies and also crypto assets and different types of, tokens. So I don't want to talk about, the basic elements. I'm sure that you are completely familiar with the issues. So I don't want to take, a snow to the Eskimos. So what I want to talk about is the challenge of, using cryptocurrencies in capital markets with a touch on, Islamic, jurisprudence and how it can be, challenging for, capital markets, regardless of the potential, opportunities that they may have for capital market. So we have actually written the, paper with, we are two, professors at Imam Sadiq University. My colleague, Dr. Reza Mirzakhani, is also the main author, and I'm the, second author. So what I want to talk about today is first the taxonomy of the money that we have, from Bank for International Settlements. Then I will talk about potential functions of cryptocurrencies in capital markets, mostly about conventional, capital markets. Then I will talk about, Sharia compliance challenges that they be kind of a hurdle for launching, cryptocurrencies in capital markets. At the end, I will have the conclusion for this matter as well. So. I'm sure everybody is familiar with this taxonomy. I have gotten this taxonomy from Bank for International Settlement. This has been a cliche for stratification of, coins and also, cryptocurrencies and also currencies on the whole with different forms. Bank for International Settlement and also the hub of, the technology hub of Bank for International Settlement has prepared this, classification. BIS has classified money into different types based on four, key features. Based on the issuer, any currency can be issued by different, issuers such as, central bank or other, issuers. Or it can be different in terms of, form. It can be digital, it can be fiat currency, it can be, hard currency whatsoever. And also it can be classified based on the accessibility. Some money can be, accessible for example, face-to-face, or it can be accessible online. And also it can be classified based on technology. I mean, what technology is behind issuing of these, currencies. So this is the general and big picture about, currencies. Last year also I talked about CBDC and also had this, a slide. I'm sure that you have already seen this, presentation. So that's the preface for the main, topic. So. I don't want to talk about the methodology of the research. The methodology has been the kind of descriptive methodology. We have studied different sources from different countries and different Sharia boards from different countries. So what I want to talk about, the potential functions of cryptocurrency for capital markets. They are potential. They have not been realized. They can have some opportunities, mostly for conventional finance, not for Islamic finance. Sharia boards in the world need to sit and figure out some solutions how we can come up with Islamic solution for these types of assets. So what are the potential functions? They include one, financial instruments in capital market. Cryptocurrency, like other financial instruments, including derivatives, for example, equities, fixed income bonds, or other things that we basically trade in capital market. They can be also treated as an asset, as a financial instrument, and investors can come to the capital market and they can use it as one financial instrument. Or they can be, this one is very interesting, and that can be as a medium for clearing and settlement in the capital market. When, as every execution has every transaction has 3 stages. Before the trade. At the trade, which is called execution of transaction, and also post-trade. So cryptocurrency, for example, different types of coins, or even CBDC, if you could classify it into cryptocurrency, can also be something which can be used by CSDs in the world for clearing and settlement of the transactions. Okay, and next one is cryptocurrencies can be used like other commodities or financial products as the underlying assets for derivatives. As you know, throughout the world, across the globe, in different exchanges, in different OTC markets, we have different types of derivatives, futures, forward, swap, and options, and sometimes they are merged together. So cryptocurrencies can be the underlying assets for this type of contracts in capital markets. So one of the challenges, one of the issues, one of the problems or setbacks that we have for cryptocurrency is the high volatility that basically is the inherent risk of one type of risk of this type of asset. So having derivatives contracts based on cryptocurrency can hedge this type of volatility in more or less, let's say. And the other one can be it can be one asset for the fund, or it can be a fund dedicated to cryptocurrency, like a specialty fund that we have in conventional finance. For example, we have endowment finance in Islamic finance, okay, such as, for example, charity fund, as we call it, in Iran. So cryptocurrency can be one part of the asset allocation in funds, or it can be one fund dedicated to, funds, which is called, a specialty fund for cryptocurrencies. Or the last but not the least, one of the challenges that I have seen in many jurisdictions in the world, in capital markets, I remember some years ago I was in Morocco, and the guy in Morocco was complaining about not having IPO for a long time, okay? So by having cryptocurrency in capital market, by having initial coin offering, so that diversity can be added to the market, and investor can come and have, this diversity in their portfolios. So these are the general, potential, functions that we reach, and they can be used in capital markets. But this is one side of the story. So, what are the main challenges? What are the main challenges for Islamic finance, cases? As you can see, I have prepared, this slide, this kind of, form, which is bented and oblique. It means that it is not, solved yet. It is not straight yet. And this is the duty of, our clergymen and clerics and Sharia boards to come up with the solution how to use it. Anyway, one of the main problems that basically scholars and erudite people have with cryptocurrency is that they do not consider it as an asset. They say that we cannot have one solid and robust, solution for valuation and, pricing model for cryptocurrencies. So, when we come to valuation in the stock market, we talk about fair value, we talk about inherent value. So how can we say that, for example, one cryptocurrency is overvalued, undervalued, overpriced, or underpriced, okay? This is one of the main issues that is basically, the first, tangible hurdle for launching cryptocurrency as a medium for clearing settlement or as an asset in the capital market. The other one is that how do we say that this is a money? How can, when we say fiat money, there is the central bank behind it, okay? So we have the support of the central bank. We can say that, for example, if something happens, we have the backing of the central bank, so it is centralized. But when it comes to, decentralized or DeFi, issues, so we do not have that, matter behind that. And also, the financial value or pricing that I mentioned, but what is important in Islamic finance, when students learn, they say that sometimes they ask, what is the benefit of Islamic finance? What is the benefit of sukuk? One of the mottos of Islamic finance is that we basically, Islamic economics, let's say, we say that we want to promote fair distribution of wealth in society, okay? By issuing sukuk, we can channel the money of households or other investors in the market, and we can bring it to the real sector. In this way, we can have economic growth in the market. And by economic growth, in a domino effect, we can decrease unemployment, rate, we can decrease misery index, we can decrease inflation. So it is a contribution to the betterment of society in one way or another way. But when it comes to, cryptocurrencies, so people who trade cryptocurrencies, you can ask this question, what does this money go to, okay? Where does money go to? Does it go to the real sector? Does it go to, to the development of economies? Or it's just something like gambling, okay? There is no meaningful, transaction behind it, okay? And this is, something that we have in Islamic finance, which is called akl mal be batil, which means that purposeless, activities, I'm just oversimplifying it that, purposeless activities and gaining some effects with no, benefits to the society on the whole, okay? So this is another, issue that we have with cryptocurrency. Next one, which is a challenging point among scholars in Islamic, jurisprudence, and that is qarar. Everybody is familiar with qarar. What does qarar mean? Qarar means something which is ambiguous, something which is unclear, uncertainty, risk. So if I want to ask you about cryptocurrency semantically, what does crypto mean? Okay, crypto comes from cryptic, okay? That is an adjective we use in typical English. So what does cryptic mean? Cryptic means ambiguous, unclear, okay? So what what is not clear is the issuer, is the backing, blockchain, DeFi, decentralization. So this can create some inherent risk for both parties. Imagine that, for example, if the system collapses, so what will happen? Where can the investors go to? Or if we have the holder of cryptocurrencies, for example, the holder of Bitcoin, if they, for example, die, if, for example, they pass away, I don't know, unexpectedly in an accident, who is the final beneficiary of these, assets? Can you say that? Or if they lose, for example, their passports, okay? So how can they redeem? How can they have their passport, set up again? These are, different issues that we have for cryptocurrency. One risk, which is very famous in Bitcoin especially, is 51%, risk. I'm sure that you're familiar with this, risk. If 51% of the investors, owners of, one cryptocurrency come to one conclusion not to, verify one transaction, so what will happen? The transaction will not happen, will not be realized. So imagine that we have market manipulation by this 51%. So what will happen? Who is the regulator? Who will, oversee this issue? Is there one arbitration board? Is there, for example, one board to refer to get this, issue, done? So that's the reason we call it 51% risk of this issue. So in capital market, in financial market on the whole, we have one reference, we have one arbitration board, we have Sharia board, we have central bank, we have, the SEO, STC. So you can refer to these, regulations, and you can sue your case, you can file a case and follow up your case. But in this one, it is not clear to whom you can refer to, okay? That is qarar. And another one, which was actually mentioned last year too, that was systematic disorder. Last year I was talking about CBDC. I mentioned that if banks turn into CBDC and they issue, for example, digital currencies for the market, maybe we have run on the market. Many people go to the, to the banks to get their, deposits, empty to go to CBDC. So we will have kind of systematic disorder. Or if we have imagine the case of Binance, okay, in the US. What happened? Many investors started to, complain. They can come to each other, and if there's an issue, it can create some, systematic disorder if suddenly, this system, collapses. And the other one is the issue. The previous presenter, Mr. Azari, mentioned, this issue that, one of the basic, elements of Islamic finance is that we shouldn't, create detriment. We shouldn't create, losses for each other intentionally. Okay, so by having some 51%, for example, investors can come together, they can have manipulation, they can have misbuying, they can have mis-selling and create losses for each other. These are the main, challenges. We have mentioned other challenges in the paper. If you have access to the paper, you can see the challenges and the previous studies that have been done in this regard. You can see that. And that's all the story with these challenges. And the conclusion. So what is the conclusion for cryptocurrency? Can we use it or not? So what should we do? It's a trend. It is something given. Lots of people are investing in this market. So what is the role of central banks in the world or other market regulators to do? So the first one, the issue which is very important in Islamic finance is consultation, coming to one conclusion. Why have we created Sharia board? We say Sharia board. Why do we say that? Sharia council. Because we have clerics coming together, experienced people coming together to reach one solid, confirmed, verified, solution to each and to each challenge. So it means that rational people come together and they say that, for example, this is true or this is not true. If we have it in the Holy Quran, we can refer to that. If we have it in the Hadith or the behaviors of our prophets, we can refer to them. Since we do not have, so we have to trust the people that have knowledge in this regard. So Sharia boards, so far as my knowledge goes, across the world, okay, have not reached any conclusion yet. So it means that there is no rationality, behind using that based on the Sharia boards. The other one is about the ambiguity of pricing and also valuation. I mentioned it's kind of, qarar as well, and lack of security. If we have cybercrime, if we have, kind of, violation of, systems, or if system suddenly collapses or your system is hacked. So is there a backup system? Is there a backup team to restore your data, to recover your data? What is that? So we have this question of security, which is always, behind the scene. As in Islam, we say that This is something that we always say in our Islamic lesson, that we need to manage unknown risk. This is rational to manage unknown risk, okay? So this is something which is hidden and inherent. And the other one was about systematic disorder, that by having a problem in cryptocurrencies, it can, since we have lots of investors, as the previous presenter mentioned, that 25% of the investors in Iran have already invested in cryptocurrencies. It's a large number. Imagine that something happens. So what will happen? Or imagine that, for example, one country is under sanctions. Suddenly, for example, exchanges that are offering cryptocurrency services, puts and place sanctions on those countries. So what will happen? That is systematic risk as well. Of course, we have this issue in other markets too, but this one is more bold. And a speculation. Many actually investors enter this market by in order to benefit from a speculation, in order to benefit from volatility, high volatility that we have in this market. So on the whole, I can tell, and we have reached this conclusion in our paper, that based on these features and also there are other issues in our paper you can refer to. Right now, so far, it's not rational, it's not systematic, it's not good and advisable and convenient and expedient to use cryptocurrency in our markets in one way or another way. Thank you very much for your attention. If you have questions, you can ask me.
Thank you very much, Dr. Mursali. That's an interesting subject. As you know, in Iran, there is a policy problem, how to deal with the cryptocurrencies, and there is a different approach in Iran between the regulatory body like a central bank and SEO. And I want to participate our guests, especially from other countries, to share the experience about how to regulate the cryptocurrency in their countries. Dr. Dinch, you have the comment.
Excuse me, sorry to interrupt you. Dear mother, can I sit or I stand here?
Is there any question from Dr. Mursali about the article?
Okay.
If there is a comment after the article, if there is a question from Dr. Mursali, please raise your hand and ask your question. There is no question, please.
Thank you very much.
Thank you very much.
I can make a little comment. Thanks, Brother Ferhat, for the presentation. Indeed, these cryptocurrencies will be on the agenda for a long time, because we are facing some difficulties of the modern money system. It has many bias, and many countries are suffering from this unjust money system. So a country with inflation is issuing reserve money. This is a problem. It is called Triffin dilemma. So this problem will cause some other problems. So this kind of alternatives always will be on the agenda, but there is a huge trend that the whole countries are converting to CDBCs, central bank digital currencies. We see many upcoming new currencies on this sense. Thank you. Thank you again, Farhad.
Dr. Ibrahim Nejad, if you have any comment about the article, the next round we will be, or your slide after the comments.
Okay, so I have a few comments on the paper, but I would like to postpone them and discuss them via the slides.
Video slide. Okay, Dr. Nisar, floor is yours.
Thank you very much. So it was a very interesting presentation. I think we all are going to have some discussion on that. Some initial remarks with regard to the theme of this conference. Actually, this all fintech that we see today is developed after 2008-9 crisis. And when we say fintech, it doesn't really mean that this is the first time financial institutions started using technology in that way. What I really feel that the difference between the use of technology by financial sector prior to 2007-8 crisis and afterwards is the main difference between the two is it is the tech player who started offering financial services, mobilizing deposits and managing services, etc. So it is the entry of tech player into finance that is defining a fintech rather than a financial player using technology for customer services. Now when you have unregulated entities, tech companies offering financial services, the biggest concern is about regulation. The biggest and ethical concerns that has already been highlighted. How do we manage these ethical concerns with regard to financial sector regulation? Because one of the most regulated business in the world is financial sector. And when you look at cryptocurrencies, you may be finding about 20,000 cryptocurrencies, more than 200, roughly 200 countries. So on an average, every country would have about 100 cryptocurrencies, etc. Out of 20,000 cryptos, today how many survives? Around 10,000. So there is an issue of players coming in, offering services, luring people in a situation like where financial literacy is still an issue, and youngsters are more prone to technology and they get fleeced by the gullible offerers. So I think the most ethical, important issue is the ethical concerns related to cryptos. And obviously we know that there are a lot of advantages of it. For example, the main advantage is the cost that has come down drastically and leading to a lot better financial inclusion across societies. Speed is another thing. We can transfer money, we can pay, we can make investments, etc. anytime we want, and it is much faster today than any time in the past. Transparency is another thing. Because of use of technology, transparency has also improved. And that all has led to enhanced customer experience that we call in financial terminologies. But it comes at the great risk of stability to financial sector, privacy to thing, exploitation of people. For example, roughly 9,000 fintech companies are there in my country who prepare some kind of app to be downloaded through Apple Store or Play Store, and they charge about 4 to 5% interest a month, and they use all kind of harassment techniques to exploit people. And despite all the effort, a regulator has not been able to check the growth of these things. So I think in a nutshell, concerns are at the moment very high as far as financial customer protection is concerned. There are obviously Sharia issues that has already been highlighted, so I would not be going into that detail. But I think it's an exciting time, but a lot more work for the regulator to do. Thank you very much.
Thank you very much. As you know, one of the emerging trends in the fintech is blockchain, and blockchain transformed the concept of the centralized and the decentralized and distributed ledger is the basic technology that changed the service in the financial industry. And as the Dr. Mursali said, we have some challenges about the using cryptocurrencies and Sharia compliance. If there is any comment from audience about their experience in their country or any other comments, we are ready to hear. Dr. Ibrahim Najat, the floor is yours.
So thank you very much again for the opportunity. I think this is an interesting paper in that it addresses a very important topic. If I can have the slides, yep. So if you can move to the first slide, please. Thank you. I have to say before I start that I'm by no means I'm an expert on Islamic finance, so please consider my comments as sorts of questions that comes to my mind as a person who is not an expert in this area. I'll start with the minor comments that, judging from the title of the paper, I would have expected the paper to be focused on the capital markets, but a big chunk of the discussion is focused on cryptocurrencies as mediums of exchange or money. So I think that's something that should be added to the title of the paper. One comment I have is when you read the paper, it kind of feels like the decentralization capabilities of the cryptocurrencies is considered as something bad, as something that we don't want. And it sounds like central control by the government or the state is considered a virtue, so that because cryptocurrencies cannot be controlled by the central government or the central bank, this is considered a major disadvantage for these currencies. Even though we know that, the track record of the centralized controllers of the money or the issuers of the money, being the central banks, has not been that great. And at least in my country, it has always been a major challenge in the financial system. So is it obvious that, all things equal, any asset or any means of exchange that is controlled by the central government or the central bank is superior to an alternative that is decentralized? I am not sure about that. That's a question that I would have liked to be discussed in the paper. Another broad comment about the paper is many of the criticisms or concerns raised in the paper are common to any new asset class. So when you have a new asset class, of course you have no regulation, of course you have little oversight, of course many investors are uncertain about the value of that new asset class. But does it mean that we should reject all the new asset classes that investors can invest in, regardless of their potential value as an investment, as any future potential that they have? I'm not sure about that. So I think, again, I think that many of these challenges are common to any asset class, any new asset class that would come to the investors' radar. For example, if you think about venture capitals, private equity, any type of new asset class, even real estate as a financial asset class, when they were first introduced to the financial world, many of these challenges that are mentioned in the paper are also applicable in their context. More specifically, I would like to mention a few of these challenges or concerns that are raised in the paper. One of them being the high volatility in the value of the cryptocurrencies. And I'm not sure what level of volatility do we consider high and what level of volatility do we consider low? Is there a threshold above which we would say this asset class is very volatile and therefore too risky for the general investor? And just to remind you, and I know those who are coming from other countries, this may sound strange, but in our country, over the last 3 years, the average volatility, the average standard deviation of inflation has been 1.7%, which means that the purchasing power of money, which we generally consider very stable, has been 1.7% on a monthly basis. So should I consider money or the Iranian currency as too volatile and therefore reject it as a means of exchange? I'm not sure about that. The other concern raised in the paper is fraud, and I completely agree with that. Many people have lost their investments due to fraud, and there have been high-profile cases of failures and fraud by major cryptocurrency exchanges. But I think the flip side of that is that many of these currencies, cryptocurrencies, and the blockchain technology behind them have been introduced to minimize fraud in a decentralized system. So it's true that they have the potential for fraud. And again, if you think about any new asset class, of course, there's little regulation, there's little knowledge among the investors, so there's higher potential for fraud. But on the other hand, cryptocurrencies and the blockchain technology can help in minimizing fraud on other fronts, including the major issue of double spending in a decentralized system. Another major concern is the uncertainty about the intrinsic value of these currencies. And first of all, I would like to mention that, the uncertainty about the intrinsic value of any particular asset is not the same among different types of investors. If I'm an expert on cryptocurrencies, I may consider Bitcoin to be 100% risk-free asset because I think 10 years from now it's going to be adopted by the whole world, right? But if I have no idea what a cryptocurrency is and it's just this strange, intangible asset, I have very high level of uncertainty about its intrinsic value. So I think it's very hard to assign a level of uncertainty about the intrinsic value of an asset across the board for all the investors. Just to give you a few examples, so think about the tech companies in the late 1990s, right? There was very high level of uncertainty about their value, about the intrinsic value of their stock, about whether their business would be successful or not. But think about what would have happened if nobody were allowed to invest and finance these companies, right? We would have no Amazon, we would have no top tech companies that we currently consider very low risk. So I think any major technological disruption is very uncertain at the beginning, but it doesn't necessarily mean we shouldn't finance it, we shouldn't invest in it. Another example is distressed companies, right? So it's an investment class. Some investors specialize in investing in distressed companies and their securities, like the junk bonds, for example. And there's a very high level of uncertainty. It's a very niche market with very few funds that specialize in identifying distressed companies that have high potential, and they invest in those companies, right? But we don't think that financing distressed companies is economically useless or damaging to the economy. We actually need to invest in these companies. And by the way, the intrinsic value of many other assets are also, many of the less uncertain assets are also, I think, very uncertain, right? So think about gold. I know gold has, practical uses, right? But putting that aside, as an investment asset class, what is its use? What is its intrinsic value? Has the intrinsic value of the gold, quadrupled over the past 2 decades just because its intrinsic value has increased? Or has it just been because, investors are interested in hedging the risks against, for example, the traditional currencies and inflation or the volatility in the financial system? So gold is an asset that has no yield, no production, but still, we think that it's fine to trade on it. And I think it's very hard to determine its intrinsic value. And again, you can think the same way about the traditional money. And if you put aside the backing of the government, fiat money has no intrinsic value whatsoever. So why do we think that, we are able to determine the intrinsic value of the traditional money or or foreign currencies as an investment asset class. So I am investing in euros or dollars as an Iranian investor, right? And what is the intrinsic value of euro? What is the intrinsic value of dollar or any other currencies for that matter? If you could go to the next slide, please. Oh, yep. And all the questions I raised, I think we probably cannot answer them the same way if we think about the pegged cryptocurrencies like Tether or the CBDCs. Some of these questions or concerns could be quite different. For example, the intrinsic value could be argued to be very different for a pegged cryptocurrency versus a currency like Bitcoin, for example. The other thing is, again, as a person who is not an expert on this field, one of the things that I learned from the article is that the power of the ruler and the credibility of the state is a major determinant in whether or not cryptocurrencies can be considered as legitimate investments. And my question is, what about the trades that are denominated in a foreign currency? If I'm an Iranian investor and for whatever reason I decide to trade in US dollars with another Iranian investment, and the Iranian central government has no control over the US dollar, right? So what is the status of that trade? Do we consider that to be a void trade or an unacceptable trade or not? So any foreign currency that is a means of exchange in Iran other than real could be classified in this category. And the other comment is it sounds like because the volatility of cryptocurrencies is very high, we think that the transfer of wealth between different investors, so when I sell it to you and you buy it from me, and the volatility is very high, you know, I sell it to you and the price goes up 10% the next day, effectively I have lost 10%, and this is considered, you know, akl bil batil, if I understand correctly. And I think for nearly all the assets, parts of the volatility can be linked to the fundamental value of that asset, and parts of the volatility is completely unrelated to the fundamental value of an asset. And it's actually a puzzle in finance because, you know, looking at the stocks, if you calculate the fundamental value of an asset or a security or a stock, the fundamental value doesn't change that much, but the stock price is jumping up and down all the time. So a big chunk of the volatility, even in the stock markets, cannot be explained by changes in the fundamental value of that security, right? So the question is, do we have a threshold for, you know, what proportion of volatility should be a result of changes, actual changes in the fundamental value of that asset, and what portion should be you know, unrelated to fundamentals, so that we can determine a transaction or a trade as legitimate or not. And I think if you think about cryptocurrencies, it's true that they have very high volatility, but on the other hand, you cannot easily say that a big chunk of that volatility is completely unrelated to its fundamentals. One of the major reasons for cryptocurrencies' volatilities is the news that comes about their adoption, right? So if there's a news that, you know, a respected company has accepted Bitcoin as medium of exchange from its customers, for example, let's say Starbucks starts accepting Bitcoin, for example, the price of Bitcoin jumps. And it's actually a news about its fundamental value because it shows that, Bitcoin is more likely to be adopted as a medium of exchange, in the society, right? So I think a big part, I haven't done a volatility decomposition. Maybe there's research on that I'm not aware of. But I think if you decompose fluctuations in prices of cryptocurrencies, I think an important part is definitely news-driven about the potential for their adoption by the wider society, and that moves prices a lot. So that part of volatility, do we consider that, unnecessary or unaccepted volatility, or do we consider that to be fine? Because, it's a new technology. There's a lot of uncertainty about the chance of it being adopted by the whole society. So any piece of news can obviously move prices a lot. So I just want to conclude. I think I went over my time. I apologize for that. But I just wanted to lay out a few questions that I would have hoped this paper or the future papers by the authors address. Thank you very much.
Thank you very much, Dr. Ibrahim Nejad, for the good comments and basic question. I think that you put more challenge on challenging the utilizing cryptocurrencies. Dr. Mursali, if you have any answer or complementary comment, the floor is yours. Yes. If you stay on the stage. Too many questions. You should write it down.
Sorry.
Okay.
So I think I had a few comments, and I'll try not to repeat each one of them. But one of the main comments I had was, it sounds like, having a centrally controlled medium of exchange or asset is considered a positive, and a decentralized asset or means of exchange would be considered something we don't want. So my question is, why is there an intrinsic value to a medium of exchange that is centrally controlled, even though we know that central banks in the past and our own central bank have had very poor performance in centrally managing the means of exchange. And then I also had a few comments about the high volatility, the fraud potential, the uncertainty, and I was saying that many other assets, especially new asset classes that are introduced to the investors, at the beginning have these challenges. So cryptocurrencies are not unique in that sense, and many other asset classes have had the same problems. And if we had rejected them at the beginning, we wouldn't have had those asset classes now that we know are very useful, including private equity, venture capital, distressed investing, and different other assets. I think these two comments were the major comments.
That was something I think in one part of the presentation I mentioned. When we are reading financial, course books or passages or text, we never see the word delete or eradicate or erase risk. We say mitigate risk. We say decrease risk, okay, or manage risk. We can never say something is riskless. This is the nature of investment. When we come to the definition of investment, we say to put our money in one market hoping to get benefits. We never say to get benefits, okay? We say we hope to get benefits because the risk is inherent nature of, investment. So, yeah, definitely we have, as you mentioned, we have centralized fiat currency, centralized market, which are regulated by SEC, SCO or CBI or other, central banks, but we have, risks. So the question is this: risk is the nature of actually investment, is the nature of financial markets, but risk, the issue of zarar wa zirar, as in Islamic finance, risk should be kind of reasonable. So what is the problem with gambling? What is the problem with some useless activities in the market, speculation, for example, arbitrage? Okay, so every investment has its own risk, but the risk that we have in cryptocurrency, okay, you say we have central banks, we have regulators of the market. If there is a failure in the system, if there is cybercrime, if there is something, you can refer to one entity, you can refer to one board to sue your case, to follow your case. But when it comes to CBDC, okay, I know this is the nature of DeFi, which is decentralized. That is the differentiating feature of cryptocurrencies. But the risk that is existent and is inherent in cryptocurrency is not as proportionate as the money that you put inside, okay? That is unknown feature. As you say that, what is the uncertainty, okay? We don't know to whom you are talking to. You don't know the market, you don't know the system. If the system fails, for example, the case of Binance or other cases in the world, imagine that you lose your password in your wallet. So what will happen to you, okay? Or if somebody, for example, gets killed in an accident, who is the final beneficiary of your asset? Is it clear? But when it comes to centralized market, okay, you have heritage issue, you have a person to refer to transfer your ownership to. That is the issue. I know risk is definitely the feature of investment, but the risk which is in cryptocurrency is not the risk that we have in conventional investment in other investments or assets in the market. That is my case. And when we come to pricing models, Professor, so what is the pricing model? Okay, do you think that all the markets? So if it is okay, so why don't we have any regulators in the world to confirm that cryptocurrencies are valid for investments? Even developed countries, they are doing their best to come to one solution. So why haven't they reached this solution? Okay, one of the things that I mentioned in my presentation is the community of clerics coming together, and confirmation of rational people in Islam, we say, is very important. So why don't we have anything from Sharia boards in the world, okay, to come to this conclusion? That is point. Yeah, your question has one aspect, yes. Why do we have the same risk in centralized assets and the same risk here? No. The volatility that we have in cryptocurrency is not comparable to the volatility that we have in typical investment in the market. I hope I covered your answer.
Thank you. This is the new subject in the world, and we don't want to solve all of the problem in this session. Thank you for your answer.
Yeah, so, sorry, this is the duty of Sharia boards to come up with solution with the emerging issues. As you mentioned, this is a novel issue. This is an emerging issue. So the duty of Sharia boards, in addition to your expertise, in addition to the people like the professor, that when they have this expertise, when they are merged, they can come up with the solution. But unfortunately, so far we haven't had this solution, regardless of the welcoming of many investors in this market. Every year we see it here, Sharia boards come together, not in Iran, in other countries, but they cannot come to one conclusion. Even in conventional finance, we have not reached any conclusion. I think it was last month, the Federal Reserve of the US gave some red flag, gave some caveats, some warnings to the investors not to invest in cryptocurrencies. So why, if they are the most developed financial market in the world, why do they have the same problem? So in English they say, when there is smoke, there is fire. Okay? Thank you.
Okay, thank you.
Can I sit or I have
okay,
to
sit
Thank
down,
you.
please. Thank you very much. Because of the lack of time, and we have another presentation by Dr. Dinch, that's very interesting for me, that because we have a mutual experience in Turkey and Iran about their rotating saving and finance, like for example, as in the presentation, Gharzul Hassan Khanwadegi, he said. The next presentation is titled by Digital Islamic Rotating Saving and Finance Platform by Professor Dinj. Floor is yours.
Thank you, dear Chair. Distinguished guest, honored to be here. Thanks to the organizer, SEO, and thanks to Brother Karim, Majid, Farhad, Mehdi, all was very helpful. And happy to be here. At the very beginning, we were discussing with Daria about the Islamic finance in Russia, and she said non-Muslims have huge attention, and I said, of course, it is more democratic. Then soon after, I saw that Dr. Hussein Mohammedi is presenting his paper on discussing how more democratic Islamic finance is. And I immediately understood, dear Chair, he is not from economics or finance. So that was reasonable. So today, my subject is Rotating Savings and Credit Association. In Iran, it's called Gorekeshi Hanewadigi. I guess Russia, they say Chernaya Kassa. China, Hui. Indonesia, it is Mengandelek. India, it is Chit Fund, Hojam. Vishi, there are many. I have reported more than 200 words which different countries use for Rosca. And I mapped all these and reported in a paper. So I will discuss with you today some issues on these Roscas from Islamic social finance perspective and to motivate a shift in paradigm. This is the outline of the presentation. If we go to next, I will start with the idea I always like to discuss if financial mediation should be for profit oriented. It is something that gives financial intermediaries, gives our money back to us and they make money. And sometimes it is very anti-democratic. They push their rules. There can be a confusion on my subject if it is capital market or not. Since I'm presenting in a capital market conference, one answer can be this: it is beyond banking. Another answer is if capital market is more democratic, so that is right place to discuss the subject. So I consider Rosca under Islamic social finance, and I consider it can play a critical role to change the paradigm of financial intermediation. So my objective in the next slide to discuss if generating a novel model for Roscas under Islamic finance principles is applicable or not to implement cryptocurrencies, to implement all other discussions that we are holding today here is possible within this model as far as I understand. The term Rosca is from 1962. You can see the next slide. Geertz first time ever used this term. And since then, little, I can say little literature piece has been delivered, but there is an increasing attention. I myself, we are having meetings with some Rosca experts from Princeton, Yale, Tufts, some other universities all around the world. We are discussing weekly about the many new studies or cases from many other countries. So in the next slide, I brought another definition. So the definition is still like, there are many different, but under Islamic finance, I brought a new definition that was in 2019 in a report. And you will see at the next slide, I perfectly used the Tekaful definition of IUFI. So it is a process of agreement among a group of people who agree that each of them contributes a specific amounts of money to be used to meet each participant's targeted amount of financing needs based on mutual solidarity and collaboration. So that is in the next slide. If the friends can switch, you can see this definition, but again, I can mention that it is perfectly the same thing, almost the same thing with IOF's tekafül definition. So if Mehdi, can you switch to next slide, even the slide after? I will show you some literature pieces. Huh? There are some studies based on concept, on framework. Yeah, you can see the, I read perfectly, you can see the definition. I believe it should be a standard under IOF or IFSP or other standard setting organizations for Islamic finance because it is very well known. I will explain in the all OIC countries. So in the next slide, you will see those literature pieces on concept and framework, on riskiness, some discusses from bank base, a little study on Sharia compliance of this. It is generally known in Arabic-speaking countries as Jamia. Jamia, so if you search Jamia, there are some more studies, but how they evaluate if it is halal or not is very limited. So in the next slide, I will not make this brief description because I'm pretty sure all the people in this hall knows how a ROSCA works, right? But I will show you a geo-economic analysis, a map. Please, can you switch, friends, to the slide after? Yeah, I didn't go for definition. I don't do that anymore. First, I understand that this is a concept very well known all around the world, and it is not necessary to describe. And that happened in Suriname. I was there for training for Suriname central bankers and finance ministry people through Islamic Development Bank. I was trying to describe the ROSCA, and they said, okay, we say Kasmoni, we know this. So since then, I don't ask, I don't give the description. I ask people how they describe. So in the next slide, you will see the map, inshallah. Please, next one. Yeah, this is the map. This map tells me a lot, respected brothers and sisters. We have very first records from China from 6th century. We have a ROSCA contract from Japan from 12th century. And this model is very well known. It is in Latin America especially. They do make a lot ROSCAs. They call Tanda Susu. They give this kind of name. But you will see that the Europe has no idea on this. The Europe has some knowledge, but these are all from diaspora. So what I understand, there is a financial model, a shadow financial model, we can say, or an unregulated financial model that is very well known and more democratic, but oppressed by this Western banking system. So all countries have banks, but they do know another financial model that they don't use. So I saw in the data facts at the entrance of this hall, it shows that the financial literacy in Iran average 35. As normal, it is lower in rural areas and more in urban areas. But what is financial literacy? In Iran, everyone should know this, and it is kind of financial literacy. We should have a look from another perspective, I guess. So that paper was published in Emerald. All countries were listed there, how they call Rosca. As I mentioned, more than 200 languages or accents were reported at that study. So I will show you some apps. This is, as I said, very well known. In the slide after, please switch. I will show you some apps, mobile apps that is offering digital Rosca. So one is from USA, another based in British Virgin Islands, another Brazil, another Germany. You can see if the friends can switch to next slide. Maybe I better had my own control. Please next. This is coal contract, as I mentioned. I will not go details because of the time limitation. Yeah, this is the points of the contract. It is the same thing today. Okay, the next one. Yeah, this slide and the next one shows some apps. This AZ fund chain, it is located in British Virgin Islands. There is a report that it makes 35 million USD transaction in a week. So there is huge attention. As you see, USA is there, but many Latin diaspora is engaging in those apps, but not the, if there is not local Americans. So in the next slide, there is another group of Rosca-based apps, also from Germany and others from USA. So they have a performance, but mainly it is not regulated. But there are some countries, they have Rosca practices also, you will see in the next slide. And there are 2 countries who have regulation. So Bangladesh, we see Canada, China, Denmark, and this Denmark, Spain, and Italy has a bank called Jack Bank. Jack Bank is established by communists who are against interest, and they implement this Rosca model for their financing. That is important, I guess. Ethiopia, Germany, India, we have different practices, but this Germany-based Parkese model is the main mortgage financing model in the country, and it is very similar to Rosca practices. For South Africa is another case. They have an association, NASASA, National Association of, they call Stockwell, they call Rosca Stockwell, National Association of Stockwells. So it is regulated as a cooperative in South Africa. They have 11 million South African members in these Rosca groups, and the amount 44 billion renminbi, ringgit, right? Ringgit. So there is another case, regulated Rosca, is Turkey. Turkey, it is newly regulated, and the government or the regulatory body gave the title saving finance. There are more than 1 million customers now. Mainly it is for mortgage and vehicle financing. But in India, it is very well used for microfinancing. Maybe there are some interesting models in India, like auction models. Those all need to be discussed if halal or not, but Turkey also, we have some risk mitigating Rosca models in unregulated area. So the model in theory is Pareto optimum. All the participants reach their targeted amount of saving before then their abilities. So I proposed uh, two models. One is Vakala based, one is hybrid model. So I can show if the friends switch to next slide. This is the autarkic saving model. It shows the Pareto optimality of the ROSCAs. So the next one, you will see the Vakala model for ROSCA if it is possible to institutionalize this model. And you will see that it is the same thing with Tekaful, almost the same business model with Tekaful. If there is instead of case claims, the risk fund make deliveries to the participants of the fund. So mainly an operator runs the model for a vakala fee. If there is an excess fund in the model, we can use the second model in the next slide. So that can be transferred to some Islamic finance principled investments. So that can develop or generate an excess reserve. So both models seems applicable to me, and the main purpose of this presentation that I'm making to implement this model and to bring an alternative that is hidden in the societies for long centuries, and almost each people in the world knows how the model works, and it is not even necessary to explain the model. Yani. It is an advantage. So within this model, we got prize from ISDB. ISDB introduced a program, Smart Economy Lab Award program, and we developed a proof of concept within this model, and it is awarded by ISDB. That was the last Smart Economy Lab program award. We developed some AI intelligence, also some ROSCA chain with some OIC currency model. We see the implementation is still on the way, but finally I will conclude that it is a vibrant model that is applicable for some fintech developments, and Iran with this social experience can easily implement the model according to my humble view. Thank you for listening, and thanks. Happy to be here together with you again. Thank you.
Thank you, Paul. Because we start by delay, we will be on time, inshallah. I checked with other panelists. There is no comment. I have one question, but is there any comment or question about the article and presentation of Dr. Dinç? The floor is on for the audience. Is there any question? I have one question, Dr. Dinç. Thank you very much for informative and interesting paper. I didn't know that ROSCA is very how many popular in the other countries, because in Iran it is famous and popular between families. But in Iran, as in our experience, these are the social institutions other than economic institutions like financial institutions. And the trust and the networking between the families is very important. قرعه کشی, some say خانوادگی, familiar. And if you want to use the technology for the ROSCA, the social aspect of the ROSCA, I think that will be changed. Yes. And so if you use the fintech, for example, technology for the ROSCA and developing app, what is the difference between crowdfunding and the ROSCA? It is my question.
Yeah, you're right. It is a real issue. ROSCA is in some cases, also in Turkey, it is party more than financial transaction. Yani. We call it gün, and gün means day. And that day, the Roska participants come together, they make party, good food, and gossip some. Huh? So digitalization can harm a bit the social part, but it somehow transfers the trust to an operator. If we can configure a reliable operator, this will be less important, I guess, but still the social part can be organized by the app itself, because the app can transfer the regular groups into their operational system. It can do it with cryptocurrencies also. Another thing, it is different from the defined crowdfunding models, but whenever I discuss the model, I say it can be one of the most appropriate crowdfunding model. And in some cases in India, like cheat fund operations, they do use it for crowdfunding also, as far as I understand. But yes, as far as I know, there are 7 models for crowdfunding, equity-based, debt-based, others. This can be another to be added to the literature. Thank you.
Here is Roska is association of people for people by people, and that is where I think crowdfunding, you have a leader who arranges fund for someone for the sake of someone. So that's the difference between Roska and crowdfunding.
Okay, thank you. But the business model is very similar.
Yeah.
Yes. Thank you very much.
If I may just have a little clarification.
You have any question?
Sharik Saab, this question is specifically targeted at you. We have a very strong social norm of, we call it committee in Urdu. Is this some form of Roska, and do you think it can be, let's say, digitized over the period of time to have a more localized social impact of crowdfunding?
See, this definitely comes in social finance, as mentioned by Dr. Yusuf. Roska, normally if I come from my country's experience, it is people who are contributing, saving, also helping member at the time through credit, and also arrange some kind of other charitable activities. It's a sometime voluntary association without any kind of registration. Sometime it is registered as a cooperative society or trust. And when you look at the other, what you said, it's purely for social, people contributing charities, donation, tabarru, etc., to help each other. So no kind of returnable deposit is there in the pure social finance. But in Roska, there is a returnable deposit as well.
Thank you very much. In this panel, we discussed about the Islamic finance and financial technology based on the Sharia law. And we had 2 articles about, one of them is about the challenging using cryptocurrencies, and the second one about the Roska and how we can digitalize Roska in different countries. There was a good panel, and thank you very much for the contribution of our panelists. Thank you very much. Have a good day.